Welcome to our channel, Las Dos Marias. Today we're going to talk about how you can get pre-qualified, or what do you need to be more precise when you need to buy your first home or maybe your investment property. What is that we're looking at? So Maria here is going to walk us through.
Awesome, yes. Well, thank you for watching our video. Please follow. We're gonna get a lot of more details about this thing. And the first step is, how the conversation should flow with your loan officer when you want to buy a house. So I usually tell my clients, we go through some requirements, and I always say you have to meet the 4 C's. So as long as you meet the 4 C's that we're gonna go over, not as in detail, but we're gonna have extra videos for that. You're gonna be okay to qualify for any type of like FHA, conventional loan, VA, standard loans, right?
Right.
So we're gonna start with the 4 C's. So as long as you meet these 4 C's, you shouldn't have any issues. Now, if for some reason you meet this one but not that one, there are alternative programs that we can help you get pre-approved with.
Got it.
Okay. So we're gonna talk, the first C, we're gonna talk about capacity. So whenever we're talking to a client, we need to see the capacity. How much are you capable of making your payment? You know, how much money you make, how much money you spend, how you get paid.
Right.
So in capacity, we have the income. A lot of clients can get, you can be a self-employed, that you work on your own. So let's say if you're self-employed.
This is what we're looking for, basically. We're looking at your current situation. What is that you do?
Correct. So one of the C's is capacity. So let's say you're self-employed. Now you might have your 1120s that are like type of forms with the IRS, because you have your separate tax returns with your corporation. You could be a Schedule C. That means that you are a 1099 and you get paid, from different companies, or maybe just one company, and then at the end of the year you do your deductions. You can be just 1099 or potentially cash only. A lot of clients, like a hair person, the gardener, they might get paid through sale, and then at the end of the year they show their bank statements to their accountant, and then you're like, this is how much I made, now I need to make my deposit. So self-employed could be one option.
Okay.
So you might be a W-2. Now, in a W-2, you could potentially be salary. You can be hourly. So depending on hourly, like you get paid per hour. Do you have an overtime? Do you do overtime? Do you get bonus? In order to qualify for overtime and bonuses, like anything extra, you have to have 2 years of history on that.
Right.
So W-2, you could be hourly, salary, and that's pretty much basically what you can be. So capacity, so how you get paid. You're self-employed, you're W-2, and then based on that, we can qualify you. Usually the way that it works is half of what you make on a monthly basis has to cover all your debt plus the new mortgage. So depending on that, you can do that. Now, what about if you're retired? You could be getting like a pension. You can getting Social Security, maybe rental income from other properties. You could be child support is another.
And alimony.
Child support. Can't write. Alimony. So there's different ways. So how you pay your bills, basically, right? Capacity. This is how much we're gonna ask you. How can you show that you're capable of making $2,000, $4,000, $6,000 mortgage payment? The other C we're gonna see is your credit. Why is credit important? Because you could make $1 million, but if you have no credit, then we have to look for an alternative financing. Or what if your credit is horrible because you just had a hardship, and you had to file bankruptcy, or you just had a foreclosure, or you've never had credit. So we need to see. So in your credit, we're gonna see what are your scores. Remember that the higher your credit score, the better the interest rate. So when someone is asking, Maria, what's your rate? Well, how much you get paid? What's your credit score? What type of property you're buying? So there's so many factors that influence an interest rate. So we're gonna see your credit score. We're gonna see your history. Do you have like new credit history. You just came to the United States and you're just now establishing how many credit cards do you have? Do you have a car payment? And we're gonna go in detail in the other few videos. This is just like 4 C's and this is
just
the basic
skeleton, right?
Yes.
Of what we're looking for, basically. They're the 4 C's that we're looking at.
Exactly, yes. So credit history, the credit scores, I think that's good for now.
Right.
I mean, there's definitely more details about that. Then we're gonna see your capital. Capital, how much money you have saved. So do you have cash? Cash under the mattress. Where's the money coming from?
Cash is king.
Yes. We need to source every money, every funds that you have. So if you tell me, Maria, I have $50,000, okay, where is it coming from? Cash under your mattress? Do you have a 401k? Are you gonna get a gift from a family member? Where the money's coming from, you know?
So be transparent with your lender, right?
Yes, exactly. The more that we know, the better is for us to structure the right file. Because once we send you the pre-approval, you find the house, you love it, you get under contract, and now you missed telling me that this money was coming from from another country.
Right.
And now we can't source it. Or you just sold something and you can't,
a car, and you don't have a bill of sale, or you don't have, it was everything done kind of under the table.
Yes.
We need to know so we can help her or him better, right?
Correct, yes. So the more that we know, it's like whenever we talk to the clients, it's like pretend that you're confessing, because we're gonna find out anyway. Because remember, in your credit report, I see where you've lived. In your bank statements, I can see where the money's coming from. You know, it could be from your savings actually.
Right.
Or your checking account, you know. All the money that you've been saving from your income, or like gifts that you received. So we need to show that. And then the other C is the collateral. It's extremely important, the collateral. Why, Maria? Why is so important, the 4 C's? Because let's say you make $10,000 a month.
This is somebody that really makes good money. But
yes,
for the sake of numbers.
For the sake of numbers, let's say your income is $10,000. It doesn't matter if it's from self-employment, W-2. Just $10,000
monthly.
Perfect, a month. Okay, so we said that half of what you make has to cover all your debt plus a new mortgage.
$5,000, right?
$5,000, correct. So let's say in debt you don't have a car payment, but you have 5 credit cards, and each minimum credit card payment is $500. Credit card payment.
Right.
So, and then you have savings $50,000 that you've been able to save. So this is a pretty steady client that probably has watched a few of our videos already. And knows it's like, my income's good, I'm saving money, no debt, perfect. Okay, so I'm like, okay, Maria, you make $10,000, half of that is $5,000, minus your expenses that are $500 a month, then your capacity is $4,500. So $4,500 is your maximum payment. PITI is principal, interest, taxes, insurance, and association. So as long as everything combined is $4,500, you're fine. But then what happens if you're gonna put 5% down payment and you tell me, Maria, the collateral is a condo hotel? Then you might need more down payment, because the type of property you're buying can't be financed with a regular FHA or conventional.
So we do care about what type of property you're buying, basically.
Correct. Condo hotel, house, single family, right?
Multi.
Condos. Especially in Florida, how many issues we're having with condos.
Right.
We have to make sure that there's no litigation, that they have reserves. If the condo is old, you know, we need to make the study. So there's a lot of type of properties. What about if you want to buy multifamily? We need to see. So you can have the perfect income, the perfect credit.
Right.
You have some savings for the 5% down payment. But then we need to see if you can qualify for any of the type of collaterals that you have, that you want. We're going to talk in the next few videos more detail about who's self-employed, W-2s.
So stay tuned, I would say, right, Maria?
Stay tuned
for the next videos. That's going to go, it's going to be probably W-2, 1099, foreigners, and everything below.
Yeah.
See you soon.